Phaswane Mphahlele from Makwe Fund Managers joins us now for a look into the day's trading session. Phaswane, thanks so much for your time today. And let's start with that inflation print. We did touch on it earlier. U.S. inflation coming in at 2.7% in December. When looking at core inflation, that number softer than expected. Taking that print into account, Phaswane, as well as the labor data we got last week, what are your expectations for the Fed's meeting come month end?
Yeah, based on the data we've received from inflation being softer on that front, labor still has some sluggishness. So we are taking the expectation that the Fed would take the correct call and hold and let all the noise pass through and start reviewing data going forward. And yeah, that's the view I'll be holding. Yeah.
And when it comes to those Fed expectations, right, I did mention that it seemed like markets were shrugging off scrutiny and concerns over the Fed's independence. We did see some Republican lawmakers, Democratic lawmakers pushing back on that DOJ probe. Will that not be considered come the 26th, the 27th of January?
No, that wouldn't be considered. The Fed currently would continue to hold and review its data to make its calls. Its credibility currently holds well intact, and it's basically signaled in the bond markets. When you look at the bond markets, they're not screaming, breaking out over 4.2, going to 4.23 or something like that. And it's reflecting that they are very trusting of the bond market, that everything is still running smoothly.
Okay.
They will hold interest rates, and their pricing in right now is lower. It's the new Fed coming in later.
All right, earnings season kicking off today with JP Morgan out with results, topping expectations and ending 2025 stronger. Last time I checked, that share price was down just over 2.5%. Why the disconnect? Is this perhaps on the back of Trump's campaign to cap credit card interest rates?
Yeah, I think so too. I'm on that view that that campaign Trump is pushing to cap interest rates would really cause a disruption to banks, especially the likes of JP Open, considering the size of their loan books. The business is cash generative from how they're increasing loan books and deposits they've been doing. And so such a capping would create reduce its size. Basically, they would not be giving loans to people that shouldn't be getting loans. So
Yeah.
reduce and affect their business across. So that's what's putting the share price lower. But overall, their performance is quite well, stunning, looking well capitalized, disciplined, liquidity is running out very well.
All right, let's look at the oil market. Major moves there with geopolitical tensions driving price action. Protests in Iran really fueling supply disruptions and pushing the price higher. Your analysis on that market, I see Sasol also benefiting on the back of the higher oil price today.
Yeah, well, when you look at the oil price, it's been going through a lot, hey? And right now it's basically been consolidating, and now finally, actually today it broke out.
Yeah.
We saw it pass through the $65 mark. So it's telling you that during this Goldilocks effect that is taking place in the US, oil is now becoming a benefactor, being the last one of the commodity pricing. And it's supported by this mainly through the fact that Trump is doing a lot of threats around Iran, and that's supporting the prices higher. So based on this, oil prices should now continue to rise higher, supported by this geopolitics and the U.S. growth broadening while inflation is deflating. So that's what the oil markets are currently signaling, and it should, the pressure, if it's sustained, it would get impact likes of South Africa in the future.
All right, let's get your stock pick. Where are you seeing value at the moment?
My value, I'm gonna go for Bitcoin. Yeah, technically
Very risky.
I know it's speculative, it's risky, it's the right type of thing to be taking in an environment where we're seeing a Goldilocks environment, whether you look locally or globally, we are broadening, inflation is coming down, there's growth policies coming through, so it allows this risk on to play. And technically, when you look at it, it's been pulling up lower highs, so it's been difficult to get the lower price. So right now, I'm just gonna jump in and to enjoy the game, ride the games from here.
All right, let's leave it there. Phaswane, thanks so much for your time and your insights this evening. That was Phaswane Mphahlele from Makwe Fund Managers.